The banks here, they're insolvent. The entire financial system operates in a perpetual black hole. The banks are getting a backdoor bailout here. These banks here have bad loans that we're not even really allowed to know about here. Their balance sheets are negative. I would be willing to say that every single major bank has a negative balance sheet. The system is being taken apart systematically and deliberately. This is not an accident. This is no comedy of errors why we are in the place that we are anywhere in the world. This is an extinction level event on a global scale.
You're watching Silver News Daily. Subscribe for more.
The financial system is unraveling, and the clock is ticking. Gregory Mannarino has sounded the alarm, warning that silver is on the verge of an explosive surge, one that could happen overnight. Decades of reckless debt expansion, currency debasement, and manipulation have pushed the US dollar to the brink. But history tells us that when fiat systems crumble, silver doesn't just rise, it erupts. Think about it. Gold has already shattered records, climbing to all-time highs, but silver? It's still lagging behind, sitting at a fraction of its true value. That won't last much longer. The warning signs are everywhere. The U.S. national debt is soaring past unfathomable levels. Inflation is creeping higher despite the Fed's empty reassurances, and geopolitical tensions are throwing fuel on the fire. This is the perfect storm for silver. And here's the kicker. When silver moves, it moves fast. Just look at history. In 1980, it went from under $6 to nearly $50 in months. In 2011, it did it again. Another meteoric rise to $50. But this time, the conditions are even more extreme. Central banks are hoarding metals, the dollar's global dominance is under threat, and Wall Street's paper silver games are running on borrowed time. So what's really driving this? Why is silver primed for a parabolic breakout while the mainstream media stays silent? And most importantly, how high can it go? Stay with me, because by the end of this, you'll see exactly why the silver market is standing on the edge of a financial earthquake.
Well, first off, I am absolutely all for cutting the size of government, for finding, apparently there's been a huge amount of fraud that's been found already, misallocation of funds found already, corruption found already. All right. I love hearing this stuff. I want to find out who's responsible for it. And eventually, hopefully, we will see some information on this be released to the public. And not just that, more importantly, is who's responsible for the fraud, for the misallocation of funds, for the corruption. Let's see some arrests. I understand this is going to take a little time to play out here. People just, they start to snap and they get triggered real quick. So I understand this is going to take some time. Yes, I hope we do see some action. I hope we see even just one high-level arrest take place. And maybe the bigger part of it is, can we claw back some of these apparent misallocated funds, fraud, and corruption? I mean, seriously. Anyway, but look, here's what's happening, in my opinion. We already know, and this is pretty widely known right now, we're already spending 3.4% of U.S. GDP on defense. Looks like we're going up to 6%. So United States is already, and in fact, I just talked about this morning, the number one investor in defense in the world. We spend more than any other nation on defense. So now this is a shell game, obviously. There's going to be no net cuts to anything with regard to the government. And how do we know that? What do we know will not be allowed to happen? A drop in U.S. GDP won't be allowed. So again, we're seeing this shell game play out however it works. I mean, I'm not saying there's not fraud here. Obviously, there is massive fraud all over the place. It's interesting, some of the people that are investigating it, though. Guys like Elon Musk and Mark Andreessen, who just took down the Consumer Financial Protection Bureau here. Andreessen, number one, not the greatest guy. People should do their own research on this kind of stuff as to what's happening. Andreessen actually blamed the Consumer Financial Protection Agency for terrorizing the banks. Terrorizing the banks, interesting. What's happening here is what you and I think we spoke about the last time, whatever. I've been trying to warn people about this, a massive deregulatory environment. The banks here must be deregulated to allow the system to move forward here in multiple ways. This isn't just one thing. The merging, obviously, of cryptocurrencies and the banks here, they're insolvent. The entire financial system operates in a perpetual black hole. The banks are getting a backdoor bailout here. And over the weekend with the virtual shutting down.
The U.S. debt crisis has gone from concerning to catastrophic, and there's no way out. The national debt has skyrocketed past $34 trillion, growing at a pace that even the most conservative economists once thought impossible. But here's the real danger. It's accelerating. The government isn't just borrowing more money, it's borrowing faster than ever, pushing the entire system toward a breaking point. Think about it. Just last year, the U.S. added over $2 trillion in new debt. This year, we're on track to blow past that, and it's not slowing down. With rising interest rates, the cost of servicing this debt is spiraling out of control. The government now spends more on interest payments than on national defense. Let that sink in. We're literally paying trillions just to keep the debt from collapsing in on itself. This isn't some abstract economic theory. This is the beginning of the end. History is crystal clear on what happens when nations drown in unpayable debt. They do one of two things. They default, causing instant financial devastation, or they print their way out, devaluing the currency and igniting runaway inflation. And the U.S.? It has no choice but to print. The Federal Reserve is trapped. If they stop printing, the system collapses under its own weight. If they keep printing, inflation spirals, and confidence in the dollar erodes. It's a lose-lose situation, and smart money knows it. That's why central banks are stockpiling gold and silver at record levels. They see what's coming. They know that when fiat collapses, hard assets like silver become the last safe haven standing. And while gold has already started its breakout, silver is still lurking below the radar. But that won't last for long, because when faith in the dollar crumbles, silver won't just rise, it will explode. And the warning signs are flashing red. The Federal Reserve's every move is now a desperate attempt to keep the illusion alive. But the reality is setting in, the world is waking up, and silver is about to become the ultimate hedge against a system spiraling out of control. And this is just the beginning, because while the debt crisis alone is enough to trigger silver's rise, the Federal Reserve's policies are making things even worse. In fact, what the Fed is doing right now is setting silver up for one of the most violent surges in history.
Well, what I would like people to do as they're listening to here is open up another window and say, has the Fed been audited? You will see that the Fed has been audited multiple times, even as of recently. However, whatever it's all fake anyway. I don't believe any of this stuff. Is it possible that Ron Paul could get in here with the forensic team and look at where the expenditures are, what the Fed's actually, where they're moving cash? And you have to understand this is why we really need a forensic audit of this institution and every institution here that's being that possibly could be involved in fraud and misallocation of funds. The Federal Reserve, along with every other major corporation, they have a public balance sheet and they have a private balance sheet. Now, I want to know if we're going to have access to that, or are they just going to let us know what's on the public balance sheet? I've been telling people for 1,000 years that there are, and this is, again, standard practice of every single corporation that exists. All the major corporations have a public balance sheet and off-balance sheet stuff. Are we going to get access to that? Because the off-balance sheet is what we really need to pay attention to. The public balance sheet, well, so they can put any numbers they want in this. It's not real. This is why, okay, you want to look at it? Fine. This is not going to be an overnight endeavor. This would be an undertaking of a tremendous magnitude. Obviously, the audits that are done on the Federal Reserve, and you can look this up for yourself, anyone can, this is just involving the public balance sheet, what they want you to see. I don't care about that balance sheet. I think everyone here doesn't care because they could see it for themselves. You could look, the Federal Reserve claims to be transparent. And for the most part, yes, there is a public balance sheet. You can see where the Fed is allocating funds and what they're doing here with it. But I don't care about that. And I really don't care about that because it's all just fake anyway. None of the government data is real. We all know that. I want to see off-balance sheet transactions, what they're doing, where they're moving cash. Because again, the Federal Reserve, as we all know, has the ability, and they do this, okay, to push cash wherever they want to with zero oversight. Absolute zero. So let us focus on off balance sheet. Or we just going to be shown yet another nonsensical, okay, everybody, this is the Fed's balance sheet. We tracked all this stuff and, we found some things here or there. They have to appease the public, obviously. But I want to see off balance sheet. Because if we don't get to see off balance sheet, then it's a joke. And who's the joke on? The joke they think is on you and me and the people that follow our work. And I can promise you that ain't the case. Because the people that follow our work have been well kept ahead of the curve on this and well educated on how the system functions.
The Federal Reserve is running out of options, and every move it makes is pushing the system closer to collapse. For years, they told us inflation was transitory, a temporary bump that would fade away. But that was a lie. Now, inflation is sticky, real wages are losing purchasing power, and the Fed is trapped in a no-win scenario. Here's the brutal reality. If the Fed cuts rates, inflation roars back with a vengeance, crushing the dollar's credibility. If they keep rates high, the government's debt burden explodes, triggering a liquidity crisis. Either way, the system breaks. And when trust in fiat money fades, real money, gold and silver, takes center stage. This isn't speculation. It's exactly what history shows us. Every time central banks lose control of inflation, precious metals surge. In the 1970s, silver skyrocketed from $1.50 to nearly $50 as inflation spiraled out of control. In 2011, after years of reckless money printing, silver once again shot up to $50 an ounce. And today, the conditions are even worse. And here's where it gets even more alarming. The Fed's favorite tool, quantitative easing, is no longer an option. The moment they turn the money printers back on, the world will see what's really happening. A last-ditch attempt to keep the dollar alive. But smart money already knows what's coming. Central banks aren't just buying gold. They're accumulating silver at record levels, knowing it's only a matter of time before the financial system resets. The Fed's own actions are setting the stage for silver's biggest breakout yet. The moment they signal a pivot, expect silver to move fast. We're talking about a metal that historically moves twice as fast as gold in bull markets. And with gold already making all-time highs, silver's breakout is no longer a question of if, but when. But there's an even bigger factor at play here. Because while the Fed is losing control, the real death blow to the dollar is already in motion, and it's coming from outside the US. A global shift away from fiat currencies is accelerating, and silver's role in the new monetary order is about to change everything.
Move cash from one place to another because, again, it comes down to GDP. Government spending is a huge part of US GDP. Now, I can't imagine, and if I'm wrong on this, it'll be interesting to see how it plays out, that President Trump here is going to allow U.S. GDP to drop. Again, we are making America great again, apparently. We have to show that America is a beacon around the world here. If GDP in the United States were to fall, now second of all, that plays into defense spending here. They're talking about 6%. So 6% of what GDP? Of a lower GDP or a higher GDP? Man, government spending, there's no way this is going to stop. They can find fraud and corruption and everything else, and I know they're going to. I mean, it's everywhere. I'm sure it's rampant. But again, what the bigger picture is, who's going to be held to account for it? Are there going to be eventual arrests? Are we going to be able to claw back some of this cash that apparently... First of all, there's been no forensic audit here. A forensic audit takes many months. This is just stuff that they're looking at or maybe even making up out of nothing because they think people are dumb. Most people have never even heard of a forensic audit, what this actually means, how they track the money. You can't just one day look at the books and say, okay, this fraud, I see it, it's right here in our face. Not saying it ain't happening, I'm sure it is. But let's see a forensic audit. Let's have an open book where the people of the United States are actually shown proof. Okay, guys, this is what's happening. these are who are responsible. This is what we're going to do to hold these people to account, and maybe we can claw some of that cash back. That's what I'm interested in seeing. Otherwise, this is just conjecture, speculation. It could be threats and intimidation as well. We don't know what's going on here. There's so much stuff going on underneath all of this that people aren't allowed to know. Again, we're being hit with a flurry of executive orders at such a pace. People can't focus on one or the other. There's something else going on here. We can't focus. We don't know what's going on here. People aren't really being told. They're not being allowed to absorb it. It's just wham, bam, 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 bam. And people are just throwing up their hands saying, okay, look, I can't pay attention to it, so I'm not even going to look at it. That's what they're hoping to achieve here. It's always the same story. It's a grand deception in my opinion. But we'll see. We'll see how it plays out. Let's give this some time to see where it goes.
Fiat currencies don't last forever, and history proves it. Every single paper money system in history has either collapsed or been devalued into oblivion. The US dollar is no different. Right now, we are witnessing the final stages of the fiat death spiral, and when it happens, silver will emerge as one of the last safe havens standing. The warning signs are everywhere. Central banks across the world are moving away from the dollar at an unprecedented rate. Countries like China, Russia, and the BRICS nations are aggressively reducing their reliance on the US financial system. And the reason? They see the writing on the wall. The dollar is backed by nothing but trust. And that trust is fading fast. For decades, the US was able to print limitless amounts of money without consequence because the dollar was the world's reserve currency. Every country needed dollars to trade oil, buy goods, and settle debts. But that system is falling apart. BRICS nations are pushing for a new global reserve currency, and they're backing it with gold and silver, not paper. Think about what this means. If fewer countries need dollars, what happens to all the trillions floating around in foreign reserves? They come flooding back to the US, and that's when the real crisis begins. More dollars chasing the same amount of goods leads to hyperinflation. That's when confidence collapses and investors panic into hard assets. We've seen this story play out time and time again. In Weimar Germany, Venezuela, and Zimbabwe, fiat collapses led to total destruction of wealth for anyone holding paper money. But those who held gold and silver, they survived and thrived. Silver isn't just a metal, it's real money. Unlike fiat currencies, silver has no counterparty risk, no debt backing it, and no central bank manipulating its supply. And when the world starts rejecting fiat, silver becomes one of the only assets people trust. But here's the kicker. Silver is still massively undervalued compared to gold. Right now, the gold-silver ratio is flashing one of the biggest buy signals in history. And when this ratio corrects, silver won't just rise, it will slingshot past expectations. This is where things get truly explosive. Because while the fiat system crumbles, silver isn't just rising as a monetary metal, it's also in the middle of an industrial demand explosion. And the numbers behind this shift are staggering.
Of the Consumer Financial Protection Agency, which I'm sure there's fraud going on over there like every other agency. These corporations here, they're frothy with it, obviously. Anyway, this is a major win. Regardless of what you may think about the Consumer Financial Protection Agency, they'd return $17 billion to people who were wronged by the banks. Now, who are we going to complain to? President Trump, Musk, Andreessen? I don't think so. Obviously, look, man, what's being set up here, quite obviously, is multiple things that people need to pay attention to with Bank of America. I've been talking about this bank for years. I think it's being set up as the fall guy for Wall Street. Trump did point this out at the World Economic Forum, before the world, blaming this institution here for things which may or may not even actually be true. All these banks are responsible for, whatever they are. And apparently Fox News did a report that they're, debanking conservative Republicans. Okay, maybe that is true, but their CEO is a conservative Republican. People can look this stuff up. The CEOs of every corporation's profile is public knowledge. We can just see this stuff. Okay, maybe it did happen, but the bottom line is, why is it being set up? And why did Greg Mannarino pick this up before anybody even opened their mouths about it? Because this is being set up as the fall guy. Again, blame must be assigned. They know the system is being taken apart systematically, piece by piece, brick by brick, to issue us a new system here. We all know it. Everyone knows it's coming here. So they need to assign blame. It always comes down to this. It's basically the way people's minds work. So they're going to assign blame. And again, they're going to chop up Bank of America's assets. Eventually, what's going to happen here, Bank of America, the people are going to get the garbage, and the other Wall Street institutions are going to get the good assets here. All these banks are in a lot of trouble, and we're going to see a much greater consolidation of power moving forward, something I believe you and I have been speaking about for a very, very long time. The consolidation of power is key to the new system. More power in fewer hands moving forward, more control of the people underneath. Anyway, this is how it's playing out. This is where it's going. Absolutely. It's too easy. Just connect the dots, and it's not too hard to see. My job as an analyst, really, of a macro analyst, is basically to connect the dots. And in this kind of environment, it's just too easy to read where we're going, what's happening here, how we're going to see this play out moving forward with regard to currency devaluation, artificially suppressed rates, and the higher cost of living for people around the world, not just here in the United States. And there's a bigger issue here in the United States, being that we still have the world reserve currency, the fact that the world today is moving away from the dollar, the inflationary environment we are in around the world, not just here in the United States. Central banks continue to buy it all. Why is it that central banks right now are the number one buyers of gold, on top of being the number one issuers and buyer of debt? Maybe people should really start to open their minds a little bit, and don't look where our politicians want you to look. It's a game. It's a game. It's a grand deception. They don't want you to see things. They don't want you to pay attention to what's going on underneath it, or you can't be aware. But that's it's pretty much in our face. And I think the people that follow our work, honestly, they get it, and they're taking action. They're not just sitting back, sucking their thumb.
The gold-silver ratio is flashing one of the biggest buy signals in history, and almost nobody is paying attention. Right now, the ratio is sitting at extreme levels, well over 80 to 1, meaning it takes over 80 ounces of silver to buy just 1 ounce of gold. Historically, whenever this ratio gets stretched this far, it signals an imminent and violent correction in silver's favor. Let's break it down. Throughout history, the gold-silver ratio has averaged around 16 to 1. That's the natural equilibrium based on how much silver and gold exist in the Earth's crust. But today's market has completely ignored that reality, keeping silver artificially suppressed. This won't last, because when the ratio finally snaps back, silver doesn't just catch up, it overcompensates, surging multiples higher than gold. Look at what's happened in the past. 1980. The gold-silver ratio collapsed from 40 to 1 to 16 to 1, and silver skyrocketed from under $6 to nearly $50, an 800% gain. 2011, the ratio fell from 80 to 1 to 32 to 1, and silver again exploded from $9 to $50, a 450% surge. Now, look at today. Gold is already setting new all-time highs, yet silver is still lagging behind. This won't last. The moment the ratio corrects, silver could easily break past $50, then $75, and beyond. And here's where it gets even crazier. This time, the setup is even more explosive. Why? Because unlike in 1980 or 2011, silver isn't just rising due to monetary demand. Industrial demand is surging to unprecedented levels. We're talking about a metal that is not only a historic store of value, but also essential for modern technology. And right now, supply is running out faster than ever. This is where the real parabolic move starts to take shape. Because when you combine a collapsing gold-silver ratio with a global silver supply squeeze, you get the perfect setup for a price breakout that will shock the markets. And make no mistake, the supply squeeze is already happening. Vaults are being drained, miners are struggling to keep up, and the amount of available silver is disappearing at a speed we've never seen before.
It's very interesting, honestly. We're not really being, look, people, they float these things out again, and people's brain starts to whirl around a little bit. We, again, going back to I believe that we, the people, should be privy to this kind of stuff. Let's see an outline specifically of what's being spoken about and how it's going to work. Because again, this just goes back to what I see happening here, unfortunately, is people are not asking questions. They, again, are falling through a trap door, which is set for them. Okay, let's just take the word of this person or this group of people or this organization here because it's all good and they have their best interest in mind. How about instead of like it's interesting how they float this stuff out there. Oh wow, people, 'cause what do people do? Just as you said, they start to, oh, well, wait a minute, maybe this is gonna happen. Oh, wait a minute, maybe this is gonna happen. Oh, that. Let's see a breakdown of this stuff here. I would rather, before I really comment about something like this, let's see, and if it ever happens, and I hope it does, a breakdown of what exactly is being spoken about and how this is going to play out. And then we got to look into this again. Oh, this is great, but we have to say, okay, this is what they're talking about with regard to this particular asset or this particular asset or whatever it might be. Now we have to say, okay, why is this happening? Who benefits? And who? There's always going to be a winner and a loser. I think that's pretty obvious. And generally, who loses? Oh, the people do. Whenever government touches something, it generally turns to crap. I mean, go back as far in history as you want to go. So we need to see a breakdown of this. It's pretty obvious. It comes down to, again, what I believe we, the people of the United States and the world, need to demand from our government. Start to hold these people to account, push back, ask for specifics. Otherwise, again, they're going to do whatever they want. Whatever they want, and there are going to be some winners and there's going to be some losers. And generally, we know who the big loser is. Unfortunately, it's the people.
The silver supply squeeze is already underway, and once the cracks in the system widen, the rush for physical silver will be unstoppable. We're not talking about speculation here. We're talking about cold, hard numbers. Global silver stockpiles are vanishing, and the warning signs are impossible to ignore. Let's start with the London Bullion Market Association, LBMA. In just the last few months, over 8% of silver inventories have disappeared from London vaults, the largest monthly decline since records began. This isn't just a blip. It's part of a much bigger trend that has been accelerating for years. At the same time, COMEX silver stocks are getting drained at an alarming rate. Since late last year, we've seen a 22% surge in silver withdrawals from COMEX-approved warehouses. Why? Because the smart money knows what's coming. Institutional investors, central banks, and even everyday people are rushing to secure physical silver before it becomes unavailable. And here's where things get even more extreme. Silver mining production isn't keeping up. Despite surging demand, global silver mine output has been stagnant or declining for years. The reason? Lower ore grades, lack of new discoveries, and years of underinvestment in mining infrastructure. Simply put, the world isn't producing enough silver to meet both industrial and investment demand. But it gets worse. Retail investors can already see the cracks forming. Try walking into a bullion dealer right now and asking for a large quantity of physical silver. Many will tell you they're experiencing delays, shortages, or massive premiums over spot prices. That's a flashing red signal that something big is brewing. And it's not just about investors. Industrial demand is consuming silver at an unprecedented rate. With governments around the world pushing for solar energy, electric vehicles, and 5G infrastructure, the need for silver has never been greater. Yet the supply? It's disappearing faster than anyone expected. This is the perfect recipe for a once-in-a-lifetime silver squeeze. The moment the physical shortage becomes undeniable, expect panic buying to skyrocket prices overnight. But here's the most dangerous part for silver's suppressors. This shortage is colliding with one of the biggest market rigging schemes in history, the paper silver manipulation on COMEX. For decades, big banks have been shorting silver, keeping prices artificially low. But that game is coming to an end. And when it does, we could witness one of the most violent silver price revaluations in history.
In finance and economics, there are literally just two fundamental truths. Number one, to have a strong economy, you need a strong currency. To have a strong currency, you need a corresponding rate of interest high enough to support the purchasing power of the currency. Why is it that People aren't told this stuff. Why is it just non-existent? And then there's a third factor, I guess, if you want, in finance and economics, and that is cash seeks yield. Cash always seeks yield. It moves into places where there's the most growth, basically, is what that comes down to. And that's why we've seen this incredible move here lately with regard to cryptocurrency. We're seeing a historic move here with regard to gold and silver as of late, as central banks are buying it all. Imagine this. Imagine a concept, seriously. Does this sound familiar to anybody who follows my work? Central banks are buying it all. They've been buying it all forever now, buying all the debt, issuing debt, buying it back through another door, buying assets. And that's what we would find on the Federal Reserve's off-balance sheet. We would see more assets that they're investing in. But we're not going to, I would be willing to bet almost anything, really. In fact, I would say almost literally anything, that we, the people, will never be able to see the Federal Reserve off-balance sheet assets. Do you think that we, the people of the United States, should be privy to that information? Yeah, I think so. But they're going to put on a public show. Maybe the Fed will get audited here, which they've been audited already. Maybe we'll see some kind of a Doge audit of this thing. But is it going to be real? Are we going to get to see again the off-balance sheet investments or what they've done off-balance sheet, or is it just going to be another public nonsensical, freak show? My bet is it's going to be a freak show as usual. It always is, man. The public, people have no idea what's going on, how the system works, why it is what it is, and why they themselves are in the current situation they're in. Why is the world today in the economic situation it's in now? It comes down to two things, which come down to one: artificially suppressed rates, currency devaluation. This is a wrecking machine for the economy and the middle class. It's a massive way to transfer wealth up to the 1% and 2%ers. But people don't know that either. They're not told this stuff. Who's going to tell them besides people like you and me, bro?
For decades, silver prices have been artificially suppressed, controlled by a rigged system designed to keep true price discovery hidden from the public. The COMEX futures market has been the weapon of choice for major banks and institutional players, allowing them to manipulate silver prices through paper contracts that have no connection to actual physical metal. But here's the thing. This system is breaking down. Let's break it down. In a fair market, prices are dictated by supply and demand. But in silver's case, COMEX and London have flooded the market with paper silver, selling contracts that far exceed the amount of physical silver available. At times, for every 1 ounce of real silver, there have been over 100 ounces of paper silver contracts being traded. That's pure manipulation. But now the cracks are showing. Large-scale withdrawals from COMEX-approved vaults are accelerating, and the number of people standing for physical delivery is reaching dangerous levels for the system's survival. The banks that have shorted silver for decades are running out of time. If enough investors demand real silver instead of paper promises, the entire scheme implodes, triggering a short squeeze that could send silver parabolic overnight. And this isn't just theory, it's already happening. Over the past few months, we've seen massive silver outflows from LBMA and COMEX vaults, a 22% jump in COMEX silver stocks being drained, silver premiums skyrocketing, signaling an extreme physical shortage. This is exactly what happened in 2021, when the Wall Street silver movement forced COMEX to scramble for physical metal. Back then, silver barely touched $30 before the manipulation machines kicked into overdrive. But this time, the supply shortage is real, the dollar is losing credibility, and the financial world is waking up to silver's true value. And here's the most explosive part. We could be on the verge of an institutional panic. If major funds and sovereign wealth players begin demanding physical silver instead of rolling over their paper contracts, the market could experience a violent repricing. The short sellers would be forced to cover their positions at any price, igniting a full-scale silver supernova. This is why the biggest players don't want you to own silver. They need the public distracted, uninformed, and still believing the illusion that silver is just another commodity. But history tells us a different story. Silver isn't just a metal, it's real money. And when faith in the financial system collapses, people always return to real money. And that moment is fast approaching. But there's another critical factor at play here: Silver's historic slingshot effect. Unlike gold, silver doesn't just move. It erupts, often outpacing gold's gains by 2 to 3 times in bull markets. And right now, the stage is set for one of silver's biggest slingshots in history.
Well, I mean, come on, man. So it's obvious. Let's just look here in the United States. Let's look at industrial output. Let's look at factory activity. I mean, it's in contraction by their own numbers, man. By their own numbers. Every part of this economy, and if you just want to look here at the United States, actually, the service sector is one that they're telling us is doing better than others. We become a service economy, and we don't make anything anymore. We're not exporting anything. We're seeing debts and deficits balloon like we've never seen before. But I mean, look, economic output globally, let's just look at one factor, and just one. Economic activity based upon industrial output and factory activity everywhere around the world. It's diminishing and diminishing and diminishing, and we're losing. As a matter of fact, what they're not telling people, and I urge people to do their own research on this, look at manufacturing here in the United States. Look at factory output here. We are net every month losing jobs in that sector because it's contracting. And meanwhile, at the same time, we're seeing global debt balloon. I mean, this is not a good situation for people to be in. And on top of that, we're seeing currency devaluation continue to accelerate. It's not going to stop. It's not going to stop until a single world leader, one, finally steps up and says enough is enough. In other words, if Trump were to say, okay, we need much higher rates. Okay, we're not going back to a constitutional money system. This is the habit I have. I point back at that painting. That's the USS Constitution. Right? It's a habit I've developed here. But we're not going back to a constitutional money system. I think we're pretty much all on the same page. We could end central banking right here and right now by executive order. If Trump would say, no more executive order, no more fiat monetary system, we are returning back to a constitutional money system. We're going to revalue gold 50, 60, 70,000. We end the Fed right here. Federal Reserve ends, no audit needed. And that would start a domino effect around the world with central banks. They would all fail. You take one central bank down, especially this one, the Fed, it ends. The central banking system ends. Or, since we know that's not going to happen, let's have much higher rates. Much higher rates would return purchasing power to the currency. No one's going to tell you that. You know this is to be true. Everyone with even the slightest understanding of finance realizes that this is a fact. Again, look, man, for people who maybe are new to this kind of a thing.
Silver doesn't just rise in bull markets, it slingshots, delivering gains that leave even gold in the dust. This is a pattern that has repeated throughout history, and right now, we are standing on the edge of one of the biggest slingshot moves ever. Here's how it works. Silver lags behind gold in the early stages of a bull market. Investors pile into gold first, seeing it as the ultimate safe haven. But once gold gains momentum and breaks key resistance levels, silver wakes up. And when it doesn't just follow gold's lead, it outperforms it dramatically. We've seen this before. 1970s bull run. Gold surged 2,300%, but silver skyrocketed 3,700%, blasting from under $2 to nearly $50. 2008 to 2011 rally. Gold climbed 166%, but silver exploded 440%, shooting from $9 to nearly $50 again. Now let's compare it to today. Gold is already breaking new all-time highs. Silver is still trading far below its historic peak. The gold-silver ratio is stretched to extreme levels, signaling silver's coming out performance. But here's the most important part. The setup today is even more explosive than in the past. Back in 1980 and 2011, silver's surges were mostly driven by monetary demand. Today we have that same monetary demand plus an unprecedented industrial boom. Silver is no longer just a hedge against inflation or a play on currency debasement. It is an essential metal for the modern world. Every major technological revolution, from solar energy to electric vehicles to 5G infrastructure, depends on silver. And supply? It's drying up. This means silver's slingshot effect could be even more violent than anything we've seen before. The moment gold breaks higher, institutional money will flood into silver, triggering an explosive move that will leave unprepared investors scrambling to buy at much higher prices. But the window to act is closing fast. The industrial demand for silver is already at record highs, and supply constraints are only getting worse. Once the financial world realizes just how undervalued silver is, the slingshot move could happen overnight. And this is just one part of the story. Because while silver's historic price action is enough to turn heads, something even bigger is happening behind the scenes. The world is rapidly shifting away from the US dollar, and silver's role in the global monetary system is about to change forever.
Be allowed to see, but of course we won't, as always. And they're going to, of course, derivatize every single thing. Nothing's at face value. You have to understand. When an institution like a bank or even a major investor is looking to put cash to work in the market, generally it's not done on a dollar for dollar basis. It's done via a derivative where the leverage is astronomical. And that really comes down to the biggest threat we have to the financial system as a whole. I've talked about this many, many times, is the derivative hyperbubble, which no one even wants to even mention or even talk about, because I don't think people understand what it is, but it's too simple. Derivative is nothing more than a side bet on an underlying asset. And with regard to that, with regard to derivative bets, there's layers of them on either side on the upside and on the downside. It's so astronomically big, no one can get their head around it. It's a monster. It's going to explode along with the debt market. Again, when people look, that makes me laugh too. When you hear, for example, oh, we're in $38 trillion worth of debt, whatever it be, that's face value. What happens to all the derivatives associated with that? I mean, people aren't allowed to know this stuff, because if people really understood the financial system the way that people like you and me and the people that follow our work do, I think people would be running for the hills. They would be demanding that we were told exactly what's going on, but they never do. And then people sit back and they wonder, hey, what happened? Why did I just lose all my investment? Why am I being thrown out into the street here? What's going on? Well, the rich are laughing their way to the bank, literally. People don't know because they're not told. They don't understand the system. And today, just as an example, as we're doing this video here, we got Powell, Fed Chair Powell, my least favorite person on the face of the earth, right before the Senate Banking Committee, being questioned. Oh, thank you, sir, for your service, as they all genuflect as creature Powell walks into the room. I mean, make this up, dude. We are living in such a twisted, dystopian environment. I don't need to tell you that, or I don't need to tell the people that follow either of our work moving forward. This is not any kind of a utopia for anyone. It may be for the 1% and 2%ers, but for the rest of us, this is a dystopian society, and it's going to get more bent out of shape moving forward, unfortunately.
The world is turning its back on the US dollar, and this is one of the most critical shifts happening in real time. For decades, the dollar's dominance has allowed the US to print money endlessly, manipulate markets, and maintain global financial control. But now, that system is unraveling, and silver is poised to benefit in ways most people don't yet understand. Here's what's happening. BRICS nations, Brazil, Russia, India, China, and South Africa, are aggressively moving away from dollar-based trade, setting up alternative systems that don't rely on US financial institutions. China and Russia are actively accumulating gold and silver while reducing their exposure to US treasuries. Saudi Arabia and other oil-producing nations are considering accepting alternative currencies for oil, challenging the petrodollar system. This is massive. The dollar's strength has always relied on one thing: global demand. If fewer nations use the dollar for trade, the value of those dollars plummets, triggering inflation at home and destroying faith in fiat currency. And that's exactly what we're seeing right now. Central banks are hoarding gold and silver at record levels, preparing for a future where the dollar no longer holds the same power. But while gold gets all the attention, silver's role in this transition is even more explosive. Historically, silver has been monetary metal just like gold. Ancient civilizations used silver coins as currency, and even in modern times, countries have kept silver reserves. But over the last century, silver has been suppressed and demonetized, pushed out of circulation so that fiat currencies could dominate. That's about to change. With fiat confidence collapsing, hard assets are making a comeback, and silver is set to reclaim its historic role as real money. And because silver has been artificially suppressed for so long, the revaluation could be far more extreme than gold's. And here's the real kicker. Unlike gold, silver is a dual-purpose metal. It's not just a store of value, it's also a critical industrial asset. This means that as the dollar weakens and inflation rages, silver will be in demand from both investors and industry at the same time, creating a perfect storm for a massive price revaluation. But the biggest clue that silver is about to explode? The smart money is already making its move. Billionaires, hedge funds, and central banks aren't waiting for the headlines. They're accumulating silver now.
I think we've outlined pretty much how this is going to play out with the shell game with regard to spending, GDP, cash moving from one place to another here. And I really do want to see some accountability eventually with regard to this. Will the people see one high-level arrest? I doubt it. I doubt it. I'm sorry. I got so sidetracked. What was the second part of that question you asked?
Just again, the backdoor bailout, as you've described it.
The backdoor bailout. Oh, it's pretty simple. Let's look at this here. What do we understand? What do we know? What can we verify? Okay, these banks, the entire financial system operates in a perpetual, never-ending deficit. It's a debt-based system, period. Which means in order to function, debt must be pulled into the system, not even in a linear fashion. It has to be exponential just to support where we are now. I did a whole video this morning, last couple of days, explaining how the markets are in a lot of trouble. Without exponential debt expansion, we're going to go nowhere. So these banks here have bad loans that we're not even really allowed to know about here. Their balance sheets are negative. I would be willing to say that every single major bank has a negative balance sheet. And on top of their negative balance sheet here, it's getting more negative because we're seeing loan defaults skyrocket across the board. This is common knowledge. So what do we have? The Federal Reserve just vastly loosened up their parameters, along with obviously what's happening with bank deregulation. With regard to, first of all, we don't even have a system where banks even need to hold any capital reserves anymore at all. We have a zero reserve system. It's an incredible thing. So, and with regard to cryptocurrencies being merged with the banks, and now via Trump's executive order, the banks now have access to this. This is going to allow the banks to take risks that, with our money, of course, not their own, because they don't have any. And it's going to allow them to do things that we really should.
The smart money isn't waiting. While the masses remain distracted, billionaires, hedge funds, and central banks are quietly accumulating silver at record levels. They see what's coming: the death of fiat, the destruction of purchasing power, and the inevitable rush into hard assets. And they aren't waiting for silver's breakout to make their move. Look at the biggest players in the financial world. J.P. Morgan Chase, one of the biggest silver manipulators, has amassed a staggering 1 billion ounces of physical silver over the last decade. Why? Because they know the COMEX paper market is a ticking time bomb, and when physical shortages take hold, silver's price will explode. BlackRock and other major funds have dramatically increased their exposure to silver-backed ETFs like SLV, signaling growing institutional demand. The iShares Silver Trust ETF, SLV, has been seeing massive inflows, with institutional investors loading up as silver hovers near key technical breakout levels. And it's not just Wall Street. Central banks are shifting strategy, loading up on precious metals at rates not seen in decades. While much of the focus has been on gold, silver demand is rising alongside it. But here's the part most people miss. Silver's supply is being drained from all directions. Industrial use is at all-time highs. Investment demand is surging. Retail silver shortages are already appearing in bullion markets. The result? A massive squeeze on available silver that could trigger an explosive supply shock. And when it happens, those who hold physical silver will be holding one of the most valuable assets in the world. History has shown that when institutional investors move into silver, prices don't just rise, they erupt. And with silver still sitting far below its all-time highs, the window for buying at these levels is closing fast. But how high can silver really go? Based on historical patterns, inflation-adjusted highs, and expert projections, the next price targets could shatter expectations. Silver's next move could be unlike anything we've seen before.
Well, let's start off. Excuse me. Let's start off with Bank of America. For years now, before any news came out on Fox, how they were debanking conservative Republicans or anything else here. Look, what this comes down to is this. I talk to everybody. I talk to everybody. I talk to a lot of people that I don't even talk about on my blog, but I get information fed to me. Maybe I do, maybe I don't. Okay. That maybe people don't know, but I kind of tell people what's going on in my blogs. All right. Because if, I'm pretty much an open book. I really, really am. And I also explain to people that Greg does talk to everyone. So I hear things maybe that people don't hear. And Bank of America, first of all, if you look at the performance of Bank of America with regard to its peers, it's very poor. And to me, not only is this something else, it's symbolic as well. The fall of Bank of America is symbolic. I think, unfortunately, they were being rapidly transformed into, again, what I've been saying, a new paradigm, a whole new set of rules for a decade. That's where we're going. It looks like things are going to change very rapidly for the good or the worse. I think what people are doing, unfortunately, is willingly surrendering their freedoms and liberties, not asking any questions. Again, this is why people can be taken advantage of. Unfortunately, we do need to hold our leaders to account, no matter how much you may love or hate them. I think that's what we need to do. Anyway, with regard to Bank of America, look, man, it comes down to this. The system is being taken apart systematically and deliberately. This is not an accident. This is no comedy of errors why we are in the place that we are anywhere in the world. Being that we have the greatest threat to humankind right now being hyperinflated, and this is, of course, the global debt bubble, which is going to burst. We're going to end up in a credit freeze locking up situation, which was happening in 2008. Credit markets, the flow of credit through the markets was stopping, pandemonium in the streets. They got to set up a fall guy. A fall guy must be set up to assign blame. For Lehman, Bear, these were the sacrificial lambs last time. But what happened? Who really benefited from that? Wasn't we the people? We the people got all the garbage. We were forced to bail out the system. Those institutions were chopped up, and the good assets on their balance sheets were bought for pennies on the dollar by the other institutions. The same thing is going to happen here. The same thing is going to happen here at Bank of America. So it comes down to the setup of the assignment of blame. So that's why Bank of America is being set up and why I was able to call this many years ago. It's too simple to see, even without anyone talking to anybody else. It is too obvious to see the situation, how it's playing out, what they must do to appease the public here. But again, I think people just are not ready at all for what's coming. They've been duped into believing that there's going to be some great change coming because let's say in this case, President Trump is going to change the entire world by being the new president of the United States. Unfortunately.
So how high could silver really go? If history is any guide, the coming breakout could shatter expectations. Every time silver has surged in the past, it hasn't just climbed steadily, it has gone parabolic. And this time, the setup is even more explosive. Let's look at the inflation-adjusted price of silver. In 1980, silver hit $50 an ounce. But if you adjust for today's devalued dollars, that's well over $150 per ounce. In other words, just to match its previous peak in real terms, silver would have to triple from today's levels. But that's just the baseline. When you factor in the collapse of the gold-silver ratio, which historically signals a silver price surge, the COMEX short squeeze, which could force banks to cover massive silver bets at any price, the explosion in industrial demand, which is consuming supply faster than it can be replaced, and the decline of fiat currencies worldwide, which is pushing investors into hard assets like never before, you start to see why some analysts believe silver could go far beyond its previous highs. $75? $100? Even $200 an ounce? The reality is, once silver breaks past its suppression levels, price discovery becomes a free-for-all. And don't forget, the last two silver bull runs in 1980 and 2011 saw price surges of 800% and 440% respectively. If we apply those same percentages today, silver could easily soar past $200 an ounce. And that's without even accounting for the fact that this bull market setup is even stronger than before. But here's the part that most people miss. It won't happen gradually. Silver moves fast. Once institutional investors and the public wake up to what's happening, we could see massive price spikes overnight. That's why the smart money isn't waiting. They're buying now before the real panic begins. And that brings us to the final, most important question. What happens next? We are standing at the edge of one of the biggest financial resets in history, and silver is poised to be at the center of it all. The dollar is weakening, inflation is accelerating, and the silver market is primed for an explosive move. The only question left is, are you ready? Left.
Of course, what always happens is the 1 and 2%ers, they get out of the market before everybody else does. All right. I've been out of this market since the high of December 5th. I came out publicly telling people I'm out of this market. I nailed the top of this market to the wall. Let's see who else could pull that off. Okay. And I'm not back in here yet. I went over a video today telling people what they need to look at if they're looking to, even though the market, and we're stuck without vast expansion of debt and artificially suppressed rates, currency devaluation, the market can't go anywhere. So there are 4 things that people need to be looking at. Number one is if we understand that we're going for 3.4% GDP defense rating to 6, defense is maybe some place you want to look at. I personally don't. I will not be putting cash into work in defense stocks, but that's one place. 2, banks. Banks are getting deregulated. Banks were handed a gift over this weekend. Gift on a massive scale, thanks to Elon Musk and Mark Andreessen. Deregulation of banks is going to be a very, very good for these institutions. Number 3. That's 2. Number 3, people should be looking at small cap stocks. Why small cap stocks? Small cap stocks, or small cap companies, should I say, are going to be more or less insulated from the issue of tariffs on the trade war. So there's what you got to look at that. And then 4 commodities. Duh. I mean, it's a no-brainer. That's what people need to do. So you got four things that people need to be looking. I'm not here to judge anyone. I'm not saying people should invest in any of this stuff here. Who am I to judge anybody? I'm nobody. I'm not supposed to judge anyone. I will never do that. But again, if we don't take action, we're in a lot of trouble here. We're being destroyed. We're being systematically eradicated. It's like bugs. And unfortunately, we need to play this game. And I don't like it anymore. I've become so jaded against this whole thing. Right? I used to love it. I used to be a guy that used to love to follow the flow of cash through the markets, where it's going, try to make my best call as to where it would go. I've been right about 90% of the freaking time. I think that's pretty substantial. I'm not right all the time. No one can be. I don't care if you're a computer or some AI thing. You're never going to be right about it. But the effort I put into this to give people actionable information has been outstanding. And people have been taking advantage of the situation, but we're forced to do it. I don't like to be forced to do anything, but this has become survival, really, of how to stay ahead of the curve and keep our heads above water. So anyway, I hope you, and I know we are, bro, you and me, we've been out here a long time, and we are doing our best to keep the people that follow our work ahead of the curve, give them actionable information, allow them to make their own decisions. I don't want to influence not one person here. I want people to listen to what you and I are saying, do their own research, make up their own mind, and then do something about it. Sound about right?
Why now? What makes this moment different from all the past silver bull markets? The answer is simple. Everything is converging at once. The debt crisis, the collapse of fiat currencies, the supply squeeze, and skyrocketing industrial demand are all hitting critical mass simultaneously. This isn't just another silver rally. This is the setup for the biggest breakout in modern history. Let's break it down. Gold has already broken all-time highs. Silver always lags behind gold at first, but when it catches up, it does so with violent speed. Every major silver bull run has been triggered by gold's strength, and we're seeing that happen right now. The Federal Reserve is trapped. Inflation isn't going away, and the Fed has no good options left. Whether they print more money or keep rates high, the result is the same: a loss of confidence in the financial system. Supply is collapsing while demand is exploding. Industrial use is at record levels, and investors are draining physical silver from vaults faster than miners can replace it. The moment a real shortage is acknowledged, silver's price will gap up violently. The paper's silver market is hanging by a thread. COMEX and LBMA have relied on selling paper contracts instead of physical silver, but the demand for real metal is rising. When too many investors demand actual delivery, the whole system breaks. All of these factors are happening right now, and history tells us that once silver begins its move, it happens fast. The last two major silver bull runs, in 1980 and 2011, saw silver rise hundreds of percent in just months. This time, the stakes are even higher. And here's the most important part. Once silver breaks key resistance levels, it will be too late to buy at today's prices. We've seen it before. Retail investors always wake up after the real move has begun, forcing them to chase higher and higher prices. The smart money isn't waiting. They're already positioned. The window of opportunity is closing. The pieces are in place, the system is cracking, and silver is poised to explode. The only question left is, are you ready?
Well, I'm not saying that it's not some manner as a bargaining chip. I think it probably is in some way, because really what's going to end up, first of all, look, who pays for this stuff? Who really pays for it? Well, it's obviously we the people. And how does that happen? The governments don't pay the tariffs. The tariffs are paid by the importers and the exporters, and those increase in costs are passed on to the people. However, this can hurt business. There's no doubt about it. And that's what obviously the 1% and 2%ers don't want to see that. So it can be used as a bargaining chip. But I don't see this as a long-term way to fix the problem. Okay, Tara, we were told last time, and for people who don't believe what I'm saying, look it up. Trump's tariffs were going to pay off the deficit in, what was it, 2 years? Couple years, everything was going to be paid off, and we were told a lot of things. The tariffs were going to pay for this and pay for that, and they didn't pay for anything. What we did get, unfortunately, was skyrocketing debt under his. And we were also told, again, do your own research on this. I'm not calling the man out. I'm telling you what the facts are. And if you don't believe me, again, look it up for yourself. Open up another window. We were told that the trade deficit would shrink. The trade deficit ballooned to record highs. So when a politician tells you things, don't just believe that that's the way it's going to be. Hold into account, do your own research on this. Is Greg lying? Who really pays for the tariffs? Is it the governments, or is it the importers and exporters and those costs passed on to you? The bottom line is the cost of living here in the United States is going to get much higher, not just via the mechanism of tariffs here, unfortunately, but via the mechanism of currency devaluation. It all plays together. We're under attack. The people, the middle class, and I've been telling people this for a long time, this is an extinction level event on a global scale. They need to create dependency on the system as we are bridged into a cryptocurrency system, which is only a conduit into what everybody knows is coming. Everybody knows we're going into a fully tokenized system. And that drives me nuts, because where's the pushback? People don't want it, but that's where we're going. Everybody knows it, but I don't see anyone, except maybe the people that follow our work, at least raising concern. And I think it's a very big concern, because it's going to come down to power, consolidation of power, a surrendering of rights and freedoms, privacy as well. Moving forward. And unless really we get a situation here where one world leader, just one, says enough is enough, we got to flip the system around, maybe write an executive order, like I said earlier, to make fiat currency illegal, go back to a constitutional money system, we're going to continue to lose. We're not going to, I don't hear not one single world leader saying, you know what? We need to return some purchasing power to the people by vastly raising rates, which would destroy the stock market. Okay, that's why the mechanism of low rates is in place here, to continue to funnel cash into who owns 90% of the stock market? The 1% and 2%ers do. Not you and me. Maybe we have some cash in the stock market, but it's infinitesimal compared to the 1% and 2%ers here. But that's the wealth transfer effect. Shovel it into the market, and
this is it. The moment silver investors have been waiting for. The financial system is unraveling, debt is spiraling out of control, and confidence in fiat currencies is collapsing. All the warning signs are flashing red. And history tells us what happens next. Silver doesn't just rise, it erupts. We've seen this before. In the late 1970s, silver skyrocketed nearly 4,000% as inflation and economic uncertainty gripped the markets. In 2011, it surged 440% as the world lost trust in central banks. But this time, the conditions are even more extreme. The Federal Reserve is trapped, global de-dollarization is accelerating, and industrial demand is devouring available silver supplies at an unprecedented rate. The setup is perfect. The US dollar's dominance is fading, and the world is turning to hard assets. The gold-silver ratio is stretched to unsustainable levels, signaling silver's next explosive move. Supply shortages are real, and the smart money is accumulating physical silver while the masses remain distracted. And when silver moves, it moves fast. This isn't a slow, gradual rise, it's an acceleration that leaves unprepared investors in the dust. The biggest gains don't happen over years, they happen in weeks or even days. And once silver breaks past its previous all-time highs, there's no telling how high it could go. So the question is no longer if silver will skyrocket, it's when. And when that moment comes, the opportunity to buy at today's prices will be gone forever. Are you ready for what's coming? Before you make any financial decisions, always do your own research and consult a professional. This is not financial advice.